Hey, my name is Chris Fenton. I'm the CEO of LoyalHomes.ca and the Fenton Group, and I'm here to talk about interest rates. The big question on everyone's mind in real estate, every home buyer, is what is the Bank of Canada going to do at the next rate announcement, which happens on July 24th. As everybody knows, in the last rate announcement, the overnight rate came down a quarter percentage, which was the first decrease in many years, but a very small drop. And we're waiting to see what happens on the 24th. Does it go down some more? Do they hold it steady? It's unlikely that it's going to drop really, really heavily on the 24th. Looking historically, the last times we've had significant increases and decreases was in the 90s and then as well in the early 80s. And those were both times of heavy inflation. The interest rate is used by the Bank of Canada. It's really their only tool to curb inflation, runaway inflation. Runaway inflation is when the cost of goods is increasing far too quickly, and they can slow it down by increasing interest rates. Now, when the economy starts to stagnate, starts to look like it's going into recession, it's a tool that they use to keep the economy growing. Historically, the interest rates we see today are pretty good interest rates. We've become accustomed to extraordinarily low interest rates, and so these seem like very high interest rates. It seems unlikely that we'll go back to those historic lows. They probably created this issue in the first place. But for sure, when interest rates drop, we're going to see mortgage rates probably follow suit. They're not directly linked, and house borrowing become more affordable. But it's probably not going to happen in big lumps. It's probably not going to happen very quickly, and it's probably not going to get back to the rates that anytime soon that we saw for the last 10 years. So you have to really weigh the pros and cons of your situation. If you have a house to sell and you're looking to buy, it doesn't really matter what the interest rates do, because however it affects the market, it's going to affect the house you're selling as well as the house you're buying. If you're looking to get into your first home, it has more of an effect on you. But then you have to weigh the cost of these increased interest rates with the money you're losing in rent, and all of that. So there's a whole lot that goes into it, and I think the public sometimes gets too caught up in interest rates and has it make decisions for them that they wouldn't otherwise make. So you need to look at the whole picture. You should sit down with a financial advisor, a mortgage specialist, and have these conversations about your scenario, what's going on in your life, what your lending power is. Make sure you're making decisions that keep you safe, keep you financially secure moving into the future. But historically speaking, these interest rates certainly are not out of the ordinary. And it will be interesting to see what the Bank of Canada does at the end of July here.